Now let us look at the next video, the application menu. I will do a quick overview of all the menus before we settle on specifics. So the file menu does not have much. It's just for connection and then backup of database and then printer setup. So we don't have much to do there. Now the cash book is where you do your cash posting, cash receipt and payment. That's exactly what the cash IPSAS does, cash receipt and payment, revenue and expenditure. So then you have vendors receivable. Well, vendor receivable comes in because we are dealing with accrual accounting. You see, in cash accounting, everything is recognition of revenue or expenditure takes place when cash has been received or paid. But under accrual accounting, you recognize revenue and expenditure when the transaction takes place, not when cash is paid. So take for instance, you buy something on credit. You don't have to wait until you pay before you recognize it in accrual accounting. But under cash accounting, you wait until when you pay cash before you recognize. So this is why you have vendors receivable, because you must recognize that transaction whether the money is paid or not. So we'll deal with this in detail. Now, this is a expenditure requisition authorization processing. This is like staff current account, where you have each employee within the system have an account tied to the national chart of account. Now, this is meant for internal cash management, where an employee is given money to do something and has to retire that money. First, the requisition must be raised. After raising the requisition, somebody must approve it. After the approval, the money is now paid, and the employee is bound to provide details to retire that money. So this is what this ERAP is meant to achieve. Now, customer receivable again is part of the accrual accounting. If you sell something to somebody on credit, you must recognize the revenue immediately you do that sale. This is different from cash accounting, where you have to wait until money changes hands before you recognize them. So we have to take note of that, because there is a difference between the cash accounting and accrual accounting, and vendors receivable and vendors payable and customer receivable are the product of accrual accounting. Now, journals. With journal, you can do direct debit and crediting without going through any of this. So most of the time, journal is used for correction purpose and for modification. We also have periodicals, prepaid expense, and unearned income. Again, these are features of accrual accounting, because there are some revenue you cannot recognize. Even though you have received the money, you can't recognize it because you've not yet fulfilled the obligation to earn that money. So we call it unearned income. So also prepaid expense. Take for instance, you pay rent in advance. It's not expense yet until every month when you have actually utilized that service. So these are another features of accrual accounting that makes it different from cash accounting. Now, this is the budget. The budget menu contains these three items. Here, you can import your budget. You import your budget and then from Excel, or you can enter the budget directly. So, in entering it directly, you have to select all the items and then type in your budget and then commit it. The next thing you can do with budget is you have budget tracking and performance reports. So this allows you to track your budget. For instance, if I click here, the annual budget comes in. If there's any supplementary, you see it there. Then you see the final budget. Then the actual shows up, and then the variance. So this is just at a glance for you to see how the budget is performing. You can also print the report associated with that. Now, in the first introductory video, I told you that the budget module in ExpressBooks is not designed for central management of budget by the budget office. That's why I say ExpressBook PSA current edition is account centric. So we are working on a central and a budget centric version of ExpressBook that will have a lot of tools to enable central management of budget. One of those tools is budget transfer, that's Vermin, budget modification, supplementary budget, and all that. We've already implemented this in some states. So we want to bring it together to make it available as a package, a separate package, so that those in the budget office can use this tool to manage account budget centrally. But all the tools we have here will still be in that edition. It's just to make sure that there are expanded tools for managing budget. For instance, where budget is operated on cash basis, and then the account is operated on accrual basis. It presents a reconciliation challenge. So this edition of ExpressBook we are planning will take care of that, will allow you to easily reconcile the account between budget and the financials. So I believe that system should be ready. If not before the end of the year, maybe in the first quarter of next year, we'll roll it out. So I'll keep a date. Then we have a fixed asset. The fixed asset module is a comprehensive fixed asset management tool that is tied to the National Chart of Account, because there is nothing you're going to manage that is not in the National Chart of Account. So if it is not there, then you have to find the closest name for it. So we classify the budget based on what is in National Chart of Account. We also have location tracking for each of the assets. So then you do your fixed asset registration. You can also import fixed asset, because based on our experience, people already have their fixed asset register in Excel. So instead of wasting time re-entering them, we have an interface that can allow the import of that budget into the system. So then you can also manually register the asset. Manually register the asset. If there is any error, you can modify. Then we have depreciation schedule. You can do your depreciation anytime. You want to do it once a year, you can do it. Twice a year, you can do it. On monthly, you can do it. So the tools are there. So then you can also do revaluation. Some assets are for revaluation method. Some are for cost, that is depreciation method. But when you are registering your asset, what will determine what it is the policy you assign to it, the measurement policy. We have depreciation, we have revaluation. So those assets that are meant for revaluation will come up here, and you can manually revalue them based on the professional recommendation or input from the valuers. Then upgrade is one thing that is missing in some of the fixed asset management tools we have seen in the past. You see, if for instance you buy a car, and at the certain point, maybe that car is due for write-off, and you now go and change the engine of that car is a different car. It has to be revalued based on the changes you've done to it. Revalue means you have to give a new cost to it, a new lifespan and all that. That is and then it start depreciation all over again from the date of the upgrade. So also we have fixed asset disposal, which allows you to neatly dispose your asset and do the accounting entries. Then we have fixed asset write-off. Now the difference between disposal and write-off is that disposal is that the asset has outlived its useful life and is still there. So you can either sell it or remove it in whatever way. You don't want it to be in the system anymore, you take it out. But writing of an asset means maybe there is an accident or the asset is damaged beyond further use. So you are just taking it out of the system, a wreck, you write it off. And in each of these, accounting entries must be made to balance the book. You don't just take it out like that. So this is a quick information center for fixed asset, where you can see each of the asset, and then you show the details of what is happening to that, the status of that asset, and then you have the report, the various report for the fixed asset. So again, this is another one module that is very much subject to uh, customization. You see, when we do things in a general format like this, we don't put too much into it. But when people ask for certain things, we now build in those things. Those things may not be general enough, but may be able to serve those people's purposes. So that is on fixed asset. Then we come to inventory. Inventory is just like fixed asset. We classify inventory based on the entries in the national chart of accounts. So we have already grouped them. And then the next thing is coding. We have to, each inventory item must have a code. We don't have anything to show here because we don't have our inventory items. So other than that, you have to do opening stock for each of the items. From opening to stock, when you purchase those items, you have to register them here. Registering does not mean you just come and put the quantity. All the details of purchase and all that must be put, and the account must be updated to balance the book. Then material issue, when the items are issued. So in the civil service rule we are building, we are assuming that these items are not for sale. They are for issue to be used within the organization. So this is not really sale kind of inventory, but it can be used for that purpose. But when you buy item at a cost, and when you are issuing item, you are issuing at a cost, the same amount you bought it. But if you intend to use this thing to make profit out of it, maybe as a result of you want to charge money on it. So when you are doing your opening stock, you can make sure that the unit cost price is not the same as unit selling price. But for the one that will be issued within the organization, the unit cost price and the unit selling price must remain the same. So now, material issue. The next thing is inventory update. Inventory update can be inventory write-up, where you manually intervene. Either when an item is destroyed, you want to manually show that, yes, remove it from the system, or there is obsolescence, you want to write it down, or there is expiration of an item has expired, you want to manually take it out of the system. So this is now the report that you have under inventory. The next thing is, this is the module that is only available in the professional edition, that is project. This is a module. Project management allows you to monitor a particular project. Remember, every project is a capital project that is tied to the program segment in the national chart of account. So when you are setting up those projects, you see that you are going to select from the national chart of account, the segment, the program segment of national chart of account to set up that project. So the thing is that it will monitor the project. When the fund is available to that project, it is received here. Then when you pay the contractor, you record it here. The entire module is based on IPSAS 11. IPSAS 11 is construction contract, but construction contract is mainly meant for the recognition of revenue. It also recognizes expense. But the thing is that the method of billing used there is a percentage work in progress. So it is the same percentage work in progress that you are using to recognize the cost, what you are spending on this project. So after that, you will now have every payment, you have to record it, and the system would log in against that project. Now, this is the progress report, the notes for which the handler of the project will be sending from time to time to tell you the position of the project. So you can log in those progress report in the system. Now, this is the construction contract disclosure form. It's based on IPSAS 11. It's a disclosure that is required for every ongoing project. Let me see. Oh, okay. Let's see if we can have something here to view. Okay, there's no data we can work on. So this is a disclosure form, and then you have the general report for each of the for the project. So I can, for instance, say let's say print. Let me see what is there. Okay, so this is a particular project. If you look at this project, you see that it has some detailed summary of what has been going on with this project and everything that you need to do to know about the project. See, the idea of somebody coming into office and you find out that, oh, there are projects, you don't even know where to start, where it started, where it ended, the funding and all that. This tool is meant to take care of that. So that is on project. Now under it too, we have construction contract bidding. This is the process of documentation of bidder, contractors, their certificate of incorporation, all the details of those bidding for the job. Whatever document you expect them to submit, you scan it and store it in the system. So when the time comes to set up a job bid, you now set it up. The job bid that the people will have to bid for, you set it up. And once they submit their bid, you register their bid. When each person submit the bid, you register the bid. There are some details that you are going to pick from that bid to enter here based on what the bid is all about required. So the shortlist, the bid shortlist is now you, not only you, maybe you shortlist those that are qualified for this bid here. Now, when you have shortlisted those that are qualified, bid evaluation. The bid evaluation is now going to be done by multiple people on the network. They will do their bid independently evaluate this bid independently. And at the end of the day, the final selection is done. Automatically, the bid with the highest score will come out. So what the other person did and all that, everything comes together to give you the summary to show that, okay, based on the score given by different people who evaluated this bid, this is the person that is qualified to win the bid. So it's up to you whether to give it to that person or to overwrite it. Then this is where you do your service level agreement for the job. So this see, the reason is this module is like this because it is still work in progress, because no MDA has yet deployed this professional edition, because maybe they feel the cost is too much or that. So but when we sit down to work with you on this, there are a lot of things we are going to incorporate into it to meet your special requirement. Now, these are tools we are going to discuss too. So TMC is transaction monitoring and control. Here, if you are operating on batch mode, you have to approve. This is where you approve the transaction that are being batched to go to the before they go to the general ledger. Then this is a TCC, Transaction Control Center. This is a central hub for all the transactions that are being posted. You can filter, it will show you who did this, who posted this, what time the person posted, and all the information you need to know line by line about a particular transaction. They are all here with the report and tools to manage them. And the other one is GL Tracker. Is just a reporting tool that allows you to track transaction and drill down to a particular item, and then you have a segment control parameters reporting. You see, some of these tools here are based on our experience with people needing to do certain things. You may not need them, but when you have a challenge and you call us, we'll tell you, okay, go here, do this, do that. Okay, so now we have data import utilities. Because we know many people are professional in Excel, they know how to enter their data into Excel. We don't stop them. We only give them a template. So, okay, enter it this way, use this template. So when they finish entering, we import them into they use this tool to import them into the system, into the data ExpressBook PSA. So these are the various data import utility. You have invoice voucher, purchase invoice voucher, cash payment vouchers, and cash receipt voucher. We have more import template than this. In the one for the state we have deployed for some state government, we have more more template than that. So now this is the general report, the general account report. The one you say general ledger, trial balance, and all that, they are all here. But here you have general purpose financial statement, which is the statutory report. The Office of the Accountant General of Federation prepared the template to produce this report. So you have to produce them based on this template and send to them. So you have a statement of financial performance, and then note to the statement of financial performance. You have statement of financial position, and then note to statement of financial position. So these are the tools that you have under the application menu. So somehow I believe with this, one can easily evaluate this system, but we'll still have to go into details of some of these, not all. There are some that merit more detailed attention. I may not deal with all of them, but I will select, for instance, cash book and vendor receivable to demonstrate the difference between cash accounting and accrual accounting. Thank you. We'll go to the next video and let's see what happens.